Welcome back to another episode of Weekly Review, Watch List, and anything market related. Today we're going to go over the indices for a bit. We're going to talk about the watch list that I came up with over the weekend. I do want to say, because of the Memorial Day weekend, I was supposed to actually do this video before the market opened today, but due to the fact that it was a holiday, I didn't really have time. The content for the viewers and the public, it's about a day late, but you can still capitalize on this and basically learn from it. So first thing I want to do is talk a little bit more about SPX and ES here. Essentially what you're looking at right now with what I went over on the weekend is this longer term trend line dating back to January of 2018. Okay, you'll see the starting point here. You connect it to the high of February 2020 and you extend it all the way out. And this is essentially what we're watching right now. So far, we haven't really had any strong closes on a daily or weekly level above this trend line yet, especially within this range that we've been trading in. Today, with the market, we gapped up and we closed below it once again. So this is going to be the key trend line that I'm personally watching and that I've been watching for over the past month, as long as we've been trading in this range. Now, obviously, everyone is waiting for debt ceiling agreement, and regardless of what's going to happen, I don't think the US is going to default. We haven't defaulted before. This is the government that you're talking about, right? They're going to come to an agreement, even though there's going to be a lot of banter and back and forth between the politicians. Typical US government type of things. But in my opinion, I do think that regardless of the outcome, it's still going to be bearish. And regardless of what happens, even when they raise the debt ceiling until 2025, it's just going to prolong a macro problem that we have already. So as of right now, based on today's market, we still haven't closed above this macro key trend line. And if we actually look at the daily action here, we essentially double topped over the weekend into today's open. I shorted ES at 42.35 this morning, rode it all the way down to 42.18. This green zone right here is essentially a very strong demand zone that we were watching over the weekend. Okay, so this demand zone was holding into today, and we finally broke down below it. And every attempt that we had back into this green box was rejected. And this is where we took the SPX puts and told you guys just to be patient, hold it. As long as we don't reclaim this green box and break back above it, essentially doing a move like this, then the shorts are valid. Okay. So we do have some room down if we're unable to at least reclaim 42.27.25 for this week. This is essentially the level that I'm watching now. Anything below that, still bearish on a shorter time frame. With SPX, looks pretty ugly on the daily. We basically had a bearish divergence that printed today. We broke back below some key levels, 42.1870, broke back below 42.1328. So we'll have to see what happens with the rest of the week. But it's short term, as long as we're staying below these levels, we can probably pull back into 41.70, 41.60s. That's what I'm looking at for that. Now, in terms of the Dow, I gave you guys a look on Q versus Dow over the weekend. Now, Q versus Dow, if you put this in the denomination, essentially shows you the strength and where the money is going. All right, and you guys can obviously see since the lows of January, money has been flowing into tech and out of Dow. Now, if we actually look at VUG versus VTV, VUG is the growth ETF, while VTV is value. Over the weekend, before this gap up, I told you guys that the rally may be capped soon for tech. And that's still what I'm seeing now. We just tested the fib on this pair into the golden pocket. And this is pretty heavy resistance right at these highs as well. So you should be able to start seeing money rotating back into value stocks, especially rotating into small caps and mid caps, which I'm going to go into right after this. But if we're actually looking at NQ as well, I'll pull up NQ for you guys. Daily doesn't look that great for tech. We just rejected the golden pocket here. This daily close is very ugly. I drew up some key levels earlier. You guys know I don't typically trade NQ, but I decided to draw up all these levels earlier. Only took me a few minutes to find them, but decided to draw up all these levels earlier because I do want to short NQ instead of ES for the rest of the week. So going to be watching out for this, but this is a very bearish daily close here. And this is basically what I'm going to be watching for the rest of the week. Now, in terms of individual names that we've looked at, highest conviction trade that I gave you guys for the week is Carvana. And we're going to go over that real quick. Now, the only reason why I even decided to look at Carvana was my last day in Miami on Tuesday. My boys and I went to Topgolf in Doral. And all of a sudden, when we got there, I see a huge Carvana building. That's the only reason why I looked at Carvana for the week, honestly. So when I saw the huge Carvana building, I was like, all right, let me just look at how Cvna looks. And when I pulled up the chart, it was screaming at me. So if we actually take a look at what's going on with Carvana, we swept the lows here. We reclaimed, had a huge pop. This was back in February. And then now it essentially retraced back into the zone. Consolidated for a bit. Very low volume down here, you'll see. Consolidated for a bit. And then we got the pop again out of the range. And we've been ranging for about a month now. Almost a month, since the beginning of May. But notice the amount of volume happening within this range. This looks like accumulation to me. So I gave you guys that over the weekend. Told you guys out of all my entire watch list, this is probably going to be my highest conviction trade. We took calls at the bell this morning for July. 15 calls. And we took November 20 calls as well. So far, by end of the day, the 15 calls hit about 50%, and the November calls are, I think, hit 16, 17%. This has a lot more room, so regardless of what happens, I have some levels here between around like 14, 34. Once we hit this golden pocket as well, I'm probably going to trim more of the July calls. Might even TP all, but I'm going to hold November's into higher targets. Love this chart. There's nothing that you can really argue with me about this being bearish, at least for the time being. This is a very bullish chart. Obviously, we still have some resistance levels to get through. For example, this zone here, which just happens to line up with this zone here, which also lines up with the golden pocket, right? Little resistance pocket here. And above that, I would definitely love to see 2067 hit within the next few months for our November calls to print. It may even happen sooner. Who knows? But we got a huge volume breakout on the daily today. Down here. All right. Volume confirms trend. So we also broke into a new high day and new high out of this range. So as long as we hold this range breakout, we're going to probably see 15 pretty soon. A couple of other ones that I liked. One, Dash pulled back from the highs this morning, but trend is still intact with this. My invalidation point I gave you guys was below 63 on the watch list, I believe, for that. So long as this range still holds here, this is still bullish. It just may need to take some time. Lots of the swings in terms of bullish biases, I like to swing further out, at least monthlies, couple months out. You can still print all those, but at least you're mitigating risk by buying yourself more time. Same thing with Roblox. Being that this was a shorter week, I only gave you guys 3 tickers on the watches versus my usual 4. But Roblox still looks pretty good to me. Reason why I like this in the first place was due to the range that it's been holding here at these lows. This may need some more time to structure out. Same thing with Dash today. It rejected the breakout at the morning and basically closed relatively flat from last week. So still trading within this range, trading above the MAs. This is essentially what I'm watching. I don't have ridiculously high targets for Roblox, but I am at least targeting the gap fill up here, which is about 45. Longer term, if Roblox can hold this range here, I do think that it can retest 50.72 again. You guys have already know that all the times that I talk about Roblox, we've been trading in the same range for the past year, since April of 2022. So there really isn't much movement yet, and it may still need some more time for this to break out of the range. All right. But I've been looking at some of the flows. For example, Carvana, heavy flow action on call side, which is also what gave me confluence in terms of a squeeze coming on this ticker. Lots of call flow. Let me see if I can pull it up. Here we go. Change the dates. Okay. Lots of call flow on Carvana. This is all today, by the way. This is just today. But I saw tons of calls coming in day after day. So this kind of backed my analysis in regards to possible squeeze coming on Carvana. Now, we're also in RIVN. So I like to go over that. We are in September calls, so don't expect daily updates on that swing from me, personally. We have so much time in the position. I'm not going to micromanage the position like that. Ideally, our first target is going to be 1582. Once this level breaks, we can expect much higher. So far, it's still holding within the range. Today, pulled back from last week's rally, but trend is still intact. Chart still looks good. Just needs a little bit more time. Invalidation is essentially a break back under the range. All right, so now let's talk about IWM. Small caps. Last week I tweeted when small cap season. The reason why I did that is because I looked at IWM. We've been trading in the same range for over a year now, 386 days. Okay, lots of tickers are doing the same thing, trading in the same range for over a year now. What's key to note is that we not only fill the gap from 2020, we held those lows. We're trading above a macro trendline support now, which dates back to the highs of 2018 and the high of 2020. And now we are also holding above the high of 2018, previous all-time high before the COVID rally. IWM right now is still in a tough spot. There hasn't really been confirmation of a break towards upside yet. But I do like the RR here. Even if you are taking calls, and personally, I like August or September calls, like a 190 or 200 call, just to buy yourself some more time in case this does continue ranging. I think the RR is there. Your stop loss is going to be a break of this range, even under 173.39. You can set a stop under there. Ideally, you want to basically set a stop under this range, which also has a trendline support down here. But the RR is here. So this is still what I'm watching on the watch list. I do want to get September calls with a target of 200, and you're essentially playing the range here. You're just playing this box. That's all you're doing. Okay? You're playing the box, you're playing the range, stop loss below the range, and just give it some time. And if small cap season does come around, IWM should pop with it. You can start watching small and mid caps as well. Lots of stocks are looking more bottomed out, although you just have to be cautious about being, personally for me, being overly bullish, at least for the next couple months. So summertime, there's usually some choppiness, and then you guys already know September is typically the worst month of the year for equities. So we'll see what happens there. But I do IWM short term for at least the next couple months into the end of summer. I think that's pretty much it. Tesla. Let me talk about Tesla because I did mention that as well. Tesla. We just broke out of the flag again after rejecting it on Friday. Today we closed above it. Not the best daily print. Don't really like this, but long as we hold above the 198.59 and we can continue ranging out of this, then I'm looking at about 230 as a target, which is essentially the range here. Top of the range from this box. Couple of ER plays that I was looking at. ASAN. Asana looks great. This was one of my best calls from the top. The last time we did an impromptu stream in 2021, I literally said, I think it's time to short Asana. Never pull a trigger. And that was when it was trading at 140s and now hit lows of 12 from 140. But this is a very appealing chart to me. Breakout of consolidation, lows were swept, reclaimed. You can see here, reclaimed it. They have ER this week, so I am looking at a 25 call for July. The only thing about it is that it might be pricing in ER. We don't know, obviously, but with every ER, you treat it as a lotto, right? but it's up $6 from the low. Right, this definitely has more room, maybe on a longer time frame. OKTA, same thing. Let me zoom out on the chart a little bit. We retested the range all the way back from 2018, and now we've broken back out of it. Not only that, we've also done a bullish retest right off the range here. Bullish retest off the range. We have this other box that we just broken out of. Again, not the best daily close, but being that this is an ER lotto that I'm looking at, probably take a longer day to call, like July or August for 100 or 110 calls. This is going to be key area as well. So if we can get above this and hold above, and maybe OKTA says something about AI, mentions it 10 times, then this should be able to pop. I also like target for dip buys later on. We've broken down. This is very bearish. Okay, nothing about this is bullish to me. This entire structure is bearish. Now, obviously, with the go woke, go broke theme going on with equities right now, Target, Bud Light, Disney, Kohl's, North Face, all these companies, they're going to the gulag because of that. But this may be a buy the dip opportunity for me personally into this red box, which is around 115, 116 to about 123. This should happen relatively soon. You may see support right around 130, which is essentially based off this high. This high over here from 2019. So you might be able to see some support there. But aside from that, I would definitely like to see Target back into this range. Possibly sweep the lows real quick and then start its new cycle later on. Any questions from you guys? Taking a look at coin, sure. All right, coin. Let's take a look at coin. Personal opinion, I think coin's going to need some time to structure out a bit, especially with crypto pretty much flat for the past few weeks. But coin does look pretty good. There's a reason why I took calls on it today for a day trade. This range is going to be key to break out of. So once it gets out of this range, I have pretty high conviction this is going to test 70 again. But like with everything else, lots of inverted hammer prints today and doji prints on the daily. But this does look good. This range is bullish to me. So we need to get above 63 for a confirmation. Can you talk about the fibs from today, the two ranges you drew out? Which fibs? Was it on ES or SPX? I don't remember drawing any fibs out on ES, but are you referring to this range, this green box? So this green box is essentially your support from the weekend. I tried to swing one contract short on futures over the weekend. Didn't really work out for me. That trade that I gave you guys, was it on Sunday? It was on Sunday, right? Yeah. It was on Sunday. We shorted, I was a little late to that, to the 42.27 short. And essentially gave you guys a target of 42.1550. That didn't really pan out. And I told you guys the better target is likely going to be 42.20 to 42.21, which is basically based off the high from Friday and the gap fill. That hit. That actually worked out perfectly. I remember I was still awake during that time. It was like midnight when it hit, and I was thinking about closing it out. I think it was up maybe $200 or $150. But then I decided to just follow the plan. Obviously got stopped out while I was asleep, but the 42.15 target finally hit once we actually had more volume in the market and the market opened today. I think you're referring to the puts, right? That we took on SPX and why I had conviction about that and why I was referring to this range. Is that what you're referring to? It might have been him, yeah. I know that he drew a golden pocket probably from... He probably drew his fibs from here. Yeah, he did. So from that initial low, you'll see golden pocket test right here. Rejected. Probably from this. From the initial high this morning, okay, you have that. You connect it to the low, the swing low that was made at 10 a.m. And then you get your fibs from there. Go right into the golden pocket, right into the 618. You take a look at MSFT. Daily candle looks ugly and it might be a good time to pull back along with the market in the future. Yeah, Microsoft looks pretty ugly at the moment, short term. This is heavy resistance for Microsoft as well, so we're actually right into this range. It would make sense for this to pull back here and lines up with what I just went over with tech. I do think that the tech rally is capped out for now. Even if we take a look at NQ. All right, this is This looks like a blow off top on the daily. This is not what you want to see. This type of candle here. You do not want to see that type of candle if you're bullish. Okay, this looks like a blow off top doji print on the daily, especially. Doesn't look that great. So this is definitely what I'm watching for. We also just rejected golden pocket as well on NQ. All right, you'll see here. So pretty bearish short term. And like I said, if I'm bearish on tech, then the entire tech sector should be capped out, at least for short term. Same thing with NVIDIA. NVIDIA as well. We breached all-time highs. Lots of momentum here. Volume climax here. Ugly daily print. Some gaps below. You can even just trade this down to 390 if you wanted to. Extended hours trading at 399 at the moment. So looks pretty bearish short term. But this is what I'm saying. I do think that we're going to start seeing a rotation back into other stocks rather than just tech. So I think, for example, Target is getting to a buy the dip zone. Even 130, I do think that it may be a safe buy the dip area as your initial bounce. And you can set stops below that and then go from there. You look at cost. Costco is starting to break out of this range. Still needs a little more confirmation, but Costco looks pretty good as well. Intel looks pretty decent to break out of this range. Any other questions? Thoughts on AI? I do want to say that I've been telling you guys to watch AI since the beginning of the year. We took a few trades in this range, which was nice, in this range. And then in March, I told you guys this can probably see 40 or 50 again. Dropped down to 17, 18, and I completely forgot about it. And now we're trading back at 44. In terms of ER, it's going to be a lot of regardless of what I tell you. I personally, I would take an ER lotto for AI, but I wouldn't put much weight on expectations. We're right now, right back into the range of 2021, summer of 2021. Obviously, you can probably assume that they're going to talk a lot about AI things. Okay, that's the key word nowadays for any earnings. But this can probably see higher into 50s. I think a couple weeks ago or last week, I told you guys to watch for 60 calls for January on AI. Those calls are now up 300% in the past like 2 or 3 days. So if anyone took that, congrats. I didn't pull the trigger. You look at W. Actually, funny thing you bring that up because I was looking at Wayfair the other day. I actually really do like Wayfair down here. Maybe a little bit late, but longer dated contracts should be able to pay on this. First target 45.13. I do this a lot. I was also looking at OSTK, but I think OSTK looks a lot worse. Yeah, OSTK doesn't look bad either. This consolidation here may look extremely bearish, but this is the type of move that they would fake out. This looks like an Adam and Eve here. OSTK looks pretty good. If tech falls, will that carry the overall market lower with it, or is that where the rotation comes in? It's likely going to be a rotation rather than just dumping the entire market. You will see pullbacks, but it's likely going to be more of a rotation. Baba ready for a bounce? I'm hoping so. You know, there's a reason why I rarely ever trade China stocks, and this is the reason. I'm still seeing heavy flows come in for Baba. You know, and I think we made the right decision to roll out our calls into 616 just to give us some more time. But the chart itself does not look that great for a short-term bounce. I do the fact that we bounce off the lows again here, so it doesn't actually look that bad. As long as we don't reclaim this red zone, this can still pop. I'm just wondering why. Like, part of the reasoning that I got into Baba was basically based on the flows. I saw so many call flows come in for 85 calls, 90 calls, 100 calls for the next 2 months, and I don't understand why. And my only assumption is that there's some type of news coming. I don't know. Right now, China is dealing with a new COVID strain, which they're projecting like millions of people to get infected by the new strain. And it's not here in the US yet, but this is obviously going to affect the entire China market. So I don't know if this is like the catalyst as well when it comes to continued pullback on China stocks. But I do think that once it breaks these lows, our calls are definitely going to be invalid. And I don't really care to hold on to them too long. Personally, wanted to follow the flows. I just don't know what they're seeing or what they're expecting. If I can pull up the flows here, pretty bullish, honestly. Especially like last week. There were so many flows that came in like at the ask for calls. Cross doesn't count. Like just very bullish. Look at this 6-2-85 calls. This was the reason why I looked at it initially. 6-2-85 calls, like 180K bought at the ask. I don't even know if they're still holding this. they're still holding it. They might have just sold it today. Looks like 3,000 at the bid. So how many contracts was this? 1,500 contracts. They might have just sold it today, probably due to the fact that it's going to become worthless if they don't get out. But the OI, just look at this OI. It went from 800 OI to 18,000 the next day, then to 34,000 the next day, 35,000 today, right? Minus the 3,000, you're still looking at 32,000 OI for 6.2. So I don't know what they're expecting for this week, but that's a shit ton of contracts to be swinging over a short week, you know. So I made the decision to just roll it out to a 616 just to be a little safer on time, and then we'll see what happens from there. But if it doesn't work out, then it doesn't work out. Questions? Any other questions?